Good afternoon. This is Oliver Slope, Blue Line Futures, coming to you from the Chicago Board of Trade. Today is Thursday, July 17th, and quite a few different things going on in the markets. Before we get into that, I got to get the plug in. If you have not signed up for a free trial of our daily commodity commentary, head over to bluelinefutures.com. Hit that free trial button, and from there you can select the markets that most interest you, from grains and livestock, energies, precious metals, stock indices, etc. We have a great team in-house that puts in a lot of hard work each and every morning. And then we have a portal that is updated throughout each day with live information and some trading notes and things that have caught our eye. So again, head over to Blue Line Futures and get signed up today. Now that we got that out of the way, we can start with the markets. We'll kick it off with the grains, the corn market. Pretty disappointing. Looking at this morning's trade, we tested yesterday's high to a T, 425 3/4, and we just couldn't get out above there, and that led to a little bit of a pullback and retreat lower on the day. That December corn contract, that was down 3 cents, 421. The big level to watch for support into Friday's trade is the Monday high and yesterday's low, 418 3/4. The bulls really want to see that defended, a break and close below there. And you could potentially see additional pressure ahead of the weekend. And then looking into next week, remember, Mondays have been weaker for 7 out of the last 8 weeks. So if weather is benign, you could potentially see additional pressure on Monday, so something to be at least aware of. Soybeans, on the other hand, a lot more friendly. Had a great day yesterday and saw some follow through in today's trade. Holding that $9.96 to $10 level was huge. We talked about that being a must-hold support pocket in our daily commentary. Break and close below there, and there's really some air on those charts down to 961 to 971, which is the December contract low, as well as those lows from April following Liberation Day. Now on the upside, potential targets to keep an eye on ahead of the weekend, 1039.5 to 1044. That is the gap from July 7th. There have been some rumors, nothing in print just yet, but there have been some rumors that there may be some good trade talks going on with China. Again, that's speculation and rumors, but that is something to kind of keep an eye on, especially ahead of the weekend, where the administration might want to control the narrative a little bit. On the cattle side of things, stalled out a little bit in today's trade. Live cattle and feeder cattle slightly lower on the day. We're approaching a very seasonally weak time of year for live cattle and feeder cattle, looking at the deferred contracts specifically. So we're talking October live cattle and then November feeder cattle, seasonally peak in the back half of July, and that goes through August into September. We're going to put out a detailed report on that ahead of the weekend. So again, if you have not subscribed to our commodity commentary, head over to Blue Line Futures and sign up for that. We'll be sending that out tomorrow afternoon. Now, for the energy side of things, crude oil held trend line support. That was nice to see at 65. Fundamentally, we think that there's pretty good value down near 65, a break and close below there. You could see some technical selling pressure continue to take the market a little bit lower. But technically speaking, holding that trend line support today was encouraging. Now we're looking at resistance up at 68. And this is for the September contract. The August contract is kind of running against the shot clock, so we're looking at September to give us a little bit longer time frame on that front. So again, resistance 68 above there. You could move towards that psychologically significant $70 handle. And then wrapping things up with something else that caught our eye in the ICE, the Intercontinental Exchange markets, is that cotton market. December cotton has been trending a little bit higher, hasn't broken out yet, but it is knocking on the door of a potential breakout. So again, it kind of goes hand in hand with the soybean market. If we do get some positive trade headlines with regards to China, I think that market could really start to outperform some of the other agricultural markets that have been really down in the dump as of late. So that's what we're looking at. That's what you should be looking at too. If you have any questions at all, please don't hesitate to reach out to our trade desk. We are ready, willing, and able to help. Remember, trading futures and options involves substantial risk of loss and is not suitable for all investors.